Hey man, so just wanted to show you this thing. We're talking about Monday's range. So these are my notes. It's just some of the stuff we're talking about. You using the daily candle. You only use midnight to midnight for shorter term setups. I'll drop you a link to the video I found in ICT where you can see where the confusion came in with the midnight to midnight. But then whenever I watch his other videos, it's always a daily candle. So keeping it simple, daily candle, and specifically Monday's range, and weekly profiles will always anchor off of Monday's range. The projections are just simple standard deviations, the 0.5, 1, 1.5, or negative 0.5, negative 1, negative 1.5, and you just keep cascading them down. So I'll show it to you in a chart. And let me just switch the screens. This should work. Okay. All right, so the blue box is going to be Monday, and it's just the daily candle from session close or session open to session close. And all I've done is I've marked out the high and low, and then I've set the standard deviations. So in the current week, I am watching how price will react off of Monday's range into Tuesday into Wednesday, and a Monday high, which is this example here, is a midweek consolidation. So I'm anticipating at least one of these days to fold back into the previous day. So the consolidation here was Wednesday's price action folded back into Tuesday. So that's the high, that's the low of Tuesday. Price folds back into it here. And then we use that same logic to kick off the third day pushing down. So that's the logic. Now, in terms of the 20-day look back, specifically on Friday, the 20-day look back becomes the third Monday. So what I mean is if this is Monday 1, Monday 2, Monday 3, the front half of the week will use the fourth Monday. And so if you take the measurement of this date range, Friday's trading 20 days back. If I want to trade in New York, then I'm looking for that 20th day, and you see how it just jumps from 18 to 20. I'm using Monday's range. So I'm electing to use Monday's range for everything I'm doing as an anchor point with the standard deviations. So I'm going to show this range, which is just this right here. High, mid, and low of that third Monday back. So once I have that, then I'm going to be able to see exactly where I would expect price to go. So again, this Monday is just taking that range, half standard deviation, full standard deviation, half standard deviation, full up and down. But I'm going to reference that price action only on Friday when it becomes the 20-day look back. So as price, and I'll go down to the 15-minute chart and 5-minute chart, as price works from one level, London's high here, touching that look back Monday, so you can title it over here. It works through the midpoint, doesn't touch the midpoint here, runs the low, has a reaction, clears the low, closes below, and then back above the half standard deviation. 15-minute chart, you can see as price works from one level here down. London's range is this. We see the extension here. We get to the 1.5 of London's range. That was the entry. Then we take that all the way down to the next level. We see a reaction, a rejection, a displacement, a return right on the level, a tease towards getting back into the range. We pop the range and we clear the midpoint. 5-minute chart. So 10 o'clock ISM news is here. London sweeps Asia which is expected. Actually, so London sweeps Asia going into this order block. So candle, gap, order block activated after the market structure shift, revisits the order block, which is the conservative entry. Aggressive or most accurate entry is going to be at the look back level. Then price breaks lower naturally. So back to that 5-minute chart where price clears through ISM, breaks the structure, revisit the first presented fair value gap. We have an order block here on the 30-second all around London's extension. And then we see the break of the look back low after news, a revisit of the look back low, sensitivity, sweep, displacement, return to the fair value gap right at the pinpoint level of this standard deviation based on the look back level, consolidation below the look back level, break it, retest it, pump higher, and then similarly we just pump straight through that look back level there. 1-minute chart is where the first presented fair value gap stuff happened. So this stuff you already know. We tease it, news event, retest it, market structure shift, revisit it, pump lower. 30-second chart is where the best entries happened in this setup. So first presented fair value gap on the 1 minute after the news event is where we see price revisit the first presented fair value gap, leave a swing low, come back to it again, break structure. We leave this order block. This is just an observation I've made, which is so market structure shift here activates the order block. It's a 2-candle order block validated with the fair value gap. Long wick, small body, take the whole thing. 2-candle order block with fair value gap is 50%. 3-candle is the body. 1 candle is the body. 2-candle is the midpoint. Retest the midpoint. That might be too fast. Price breaks down. Good bullish setups become inverted. So market structure shift, sweeps the low, revisits the inefficiency. We drop lower. We have a little bit of consolidation here. We drop lower, we revisit. This is the one that I think where you saw on the dealing range, and I was saying this is like, oh, it's the level is in. So we finish the AM session and we move into the start of the lunch. We see accumulation, manipulation, distribution. And the classic favorite level or model for entry, price action pattern entry with the fair value gap, bam, pushes higher. One more retest right at the level. So sensitivity bullish, break, sensitivity bearish, break, sensitivity bullish. And then I'm gonna go back up on the 5-minute here real quick. And I'll end it with this, which is the next range, which is the lunch range between 12 and 1. So as price clears through the low of 12 and high, we get our last retest, which would indicate an AM decline, PM rally. Candle breaks above the lunch range, retest the lunch range, and then push off, challenging the London low one more time to close off the day. So beautiful structure, and all framed off of the weekly profile. I'm gonna hide these look back levels again. I keep them on a separate template because obviously you can tell it gets a little bit tricky. Monday high, midweek consolidation, bullet train down. Friday often has a kick up but doesn't always have it. This one was signaling off of the look back level when price reached the standard deviation. So yeah, just let me know. Just let me know. Cool.